So there could be one more dump. Do not be fooled by the short-term bounce within the market at the moment. I don't think that it's quite yet over. And the chaos could still be just around the corner. So let's get straight into it and into the latest news that's just broken with regards to FTX. And this is not really a good sign. So if you do have a look at this, FTX faces liquidity shortfall of up to $8 billion. They're seeking emergency funding to meet the withdrawal requests. And I don't know if you guys know, but Binance have essentially pulled out. So it says, as a result of corporate due diligence, as well as the latest news reports regarding mishandled customer funds and alleged U.S. agency investigations, we have decided that we will not pursue the potential acquisition of FTX. And it's as I warned of yesterday. I said, this story is not over yet. There's still going to be more that's going to unfold. And there are many, many puzzle pieces that need to come together for us to find out what is really, really going on over here. And then you have a lot of different comments over here, everybody calling for new lows. So I do think that there is still more pain around the corner. And if you look, the one major event that's happening today that a lot of people have forgotten of because of the FTX saga that's going on is, of course, today is the CPI month-on-month and year-on-year inflation rate data that is going to be coming out. And keep a close eye on that. It's at 8:30 a.m. That's EST time, so US time. And the stock market will also most likely react to that. So it really is going to depend on what those results are, whether there is a short-term bottom that's in or whether we're going to capitulate further. I'm going to show you what I've been looking at with regards to calling for a market bottom. And I've warned you guys of this for many, many, many months. I told you there's 3 criteria that I look at in order to determine whether the bottom is actually in. And I'm going to go over those criteria today, and we'll see which ones are missing because they haven't all hit yet. But we're seeing the etchings of some of those taking place right now. And you have Gergarvin over here. He says that the U.S. Justice Department is now looking into FTX hours after the SEC started its investigation. And I see a lot of comments over there with FTX being down. Yes, guys, I mentioned yesterday that, look, I think it's safer to get your funds off of exchanges if you can. Use a hardware wallet, a nano ledger, a MetaMask, anything, but at least take the hodl positions that you have offline. I understand for a trading account, of course, we need exchanges, right? We have to use some exchanges. And I personally think that things will be okay with the majority of exchanges. But with that being said, it's rather safe than sorry. It's risk management. And part of becoming a wealthy individual is protecting your assets and keeping those funds safe over time. So definitely consider using a DEX in future if you want to do spot bids. So the CPI estimates, which are coming out today, on average are about 7.9% if you add all of these together. This is what they're estimating. Anything that comes in above that, of course, is going to be another catastrophic blow to the market, and you can expect further downside continuation. My indicators are personally telling me that I should also still anyway expect further downside, but we'll get into that with the charts in just a moment's time. And then you have Dylan Leclerc here, who's just outlined that Tron-based algorithmic stablecoin has begun to depeg and is trading at 0.985. And then you can see here on Twitter, Tron is trending. So there's a whole lot that's going on with Tron at the moment. And if you do look at the coin, I don't know, it doesn't look too hot. It's a dangerous thing to be keeping these your cash flow in these algorithmically backed stable coins. I don't recommend it. So when price moves quick, I think the easiest thing to do is just zoom out completely and then look at price from an overhead kind of view and try and get an understanding of where we at within the market cycle. So 12-month chart, first and foremost, I want to outline the 12-month chart. It doesn't look good when you look at it like this. As on, if this were any other time frame, you'd think that this thing is going to still go much lower. And I warned of that a long time ago. But the real concerning one is Ethereum. And the reason why is if Ethereum takes out its previous yearly open, which is coming in at $743, that could be catastrophic for Ethereum. That could send Ethereum down really, really hard, which is why, guys, the safest thing that you can do right now, I know it's not the most glamorous or fancy or anything like that, but the safest thing that you can do is just dollar cost average and let everything work itself out over time. dollar cost average bit by bit by bit. Again, check out the link below to Biswap. That's a great DEX that you can use. You can use other ones if you want, but at least dollar cost average into a offline cold storage hardware wallet that you can secure those funds. And that will give you an average of this move, because there are some concerning factors, which if you look at this, what Peter Brunt, who's one of the top traders in the world, what he says here, he says, it should be noted that the current decline in Bitcoin as of today's low is only the 5th worst bear market in history. An 80% decline would take price to 13,800, and an 85% decline would take price down to 10,350. So let's quickly go back to Bitcoin over here and then move it onto a quarterly chart. Now, if you look at the quarterly chart, and I've had this chart outlined for a very, very long time for you guys, and I showed you at the very least, this is the level that I'm looking to, which is a key yearly level as well as a key quarterly level. It's coming in at 13,880. So in line with what he just said here, an 80% decline would take you to 13,800. So it's about within range of where you would expect a typical bear market to end. And then if you use this, just a simple trend line connecting from pretty much 2017 and then all the higher lows throughout, that matches up with also a strong horizontal, which is coming in at 10,760. And I showed you guys this chart months ago, I think probably already about 5 months ago, and I said that I think this is where I would like to see a major bottom found. $10,756 would be my ultimate sweet spot. On Ethereum, to match up with the same on Ethereum, you'd be looking at $743. But as I mentioned on the yearly chart, if that gets lost, it will take out the previous yearly candle. And that means that you could potentially go all the way down to $291. And that would be catastrophic. And the only way that I could see something like that happening is if extreme regulation were to take place. Something with pretty much with the SEC came out and they overruled their ruling of Ethereum being a security. So that would be the only way that I could see that happening. But let's go back onto this tweet. Then he says over here, the biggest concern that I have for Bitcoin, note I'm still a small owner, is that no previous bear phase has taken prices below the high of the previous bull phase until now. And this could be a game changer. Then he corrected himself though, and he said, well, actually in November to January 2015, the bear market to 164 declined below the 2013 high of 269. But nevertheless, it is still a bad thing. You typically don't want to have 5-year levels taken out from before. And I warned of this as well using the logarithmic regression curve over here. And I told you guys that in the previous market cycles, we had only spent 10 weeks and then alternatively 8 weeks outside of those lower bands. And now we had been spending 6 months outside of those lower bands, which is absolutely catastrophic. This is not what you want to see. And I told you, this is almost guaranteed to lead into a capitulation candle. And now we've started with this capitulation candle. The capitulation candle has just begun. And what you should be hoping for as a bull or somebody that enjoys the space is you should really hope that this candle comes all the way down to this 10K level now, pretty much over the course of today or this week, because you don't really want to see this drawn out for a long period of time, because it changes the long-term health of the market and it could set us back many years within crypto from a recovery perspective if it takes long. But if it happens very quickly and it can just spike down, grab all of the liquidity at about $10,000 to $12,000 and spike back out of that level fast, like I'm talking within hours, you come down and come straight back out of that level, that would mark a market bottom. But things are different right now. And I've told you that before. Things are very different because the Fed are continuing to tighten. And they've said that they nowhere near stopping on their tightening phases. And therefore, you don't want to go all in. And I've told you guys that I will be buying here. If price comes into this zone, anywhere within this level, I will be buying. Some of your orders should already have been hit. We've been using the BitGET strategy with the grid trading strategy where I told you to layer your orders all the way from $16,000 down to $10,000 because that is where you would want to get entered into the market for a potential bottom within this zone. And therefore, some of your orders should already have been hit. So keep that in mind. But that's only some of your portfolio. The rest of your portfolio, you want to dollar cost average in. And then the other part of your portfolio, and you determine your splits. Let's say you're using 25% to try and catch a falling knife. This would be what you call catching a falling knife, buying a capitulation candle. Then let's say you're using another 25 to 50%, you choose. So now you're between 50 and 75% entered. That you're using to dollar cost average into the market as it goes down. And then as it starts to go back up, you just continue dollar cost averaging. In the rest of the portfolio, what you want to do is you want to use that to enter into the market only when a new uptrend gets established. So when you make a higher high and a higher low, and then you start adding a higher high, higher low. That is the safest way to get into a market, is in an uptrend, because you don't know how long this downtrend will go down for, especially with what the Fed are doing. We don't know. It's like, let's see, we're in uncharted territory, different times. They printed so much money after COVID. It's pretty much like a hangover effect, right? We have to overcome all of that, and it could take quite a bit of time. So you need to have a strategy when it comes to how much are you allocating towards buying the dip or the capitulation candle, how much are you allocating towards dollar cost averaging over the next 18 months, and then how much are you going to allocate towards getting back into the market when a new uptrend is established, or how much will you be saving, keeping aside for when that uptrend does come, because you want to have some cash heavy positions as well. I am pretty much still fully in cash other than a dollar cost average position. I have not yet entered the market, and I will let you know when I do. Now, looking at the Bitcoin divided by the VIX, which is the volatility indicator, you can see that it is ticking up over here. And of course, the move is breaking down, which means that it's implying that the volatility is going to continue to expand towards the downside, meaning that we will most likely see lower prices. So that's one thing. Now, Crypto Poseidon says over here, we are entering the anger phase. And he says just last capitulation and long time accumulation phase is coming with depression. And then he says, I'm ready to turn back to the green side, send it down for the last time. And you'll remember on last week, Friday, I did a show specifically on this. And let's take a look at exactly what's going on over here. So zooming in, pretty much we went through the whole phase: hope, optimism, belief, thrill, euphoria, complacency, bounce, which actually was like a second euphoria because it went higher, anxiety, denial, slight capitulation. You can have another capitulation though over here. That's why the capitulation section can be moved. It's like, this is this panic or is this capitulation? If this candle comes down here, that would kind of be capitulation around there. So this is subject to be moved around, but then that's going to lead into real anger, which, as Crypto Poseidon says, we're probably going to get into now. Definitely people are angry, especially with what's going on with the exchanges and FTX and all of that. And then you go through this like long drawn out phase, unfortunately, which is going to be like another 3 to 6 months after that of depression. And this is where you want to really milk that dollar cost average portfolio using a DEX. So use a DEX, or if you're using a centralized exchange, at least funnel that money as soon as you're buying it into cold storage wallets, and then dollar cost average into this section. And then remember, you have to have some money that's on the way up when a new uptrend gets established. But sticking with this chart over here, I just want to outline this. So I mentioned to you before that a lot of people were able to nail the top as range traders because they kind of looked at it like this, right? You had the bottom of the range, the top of the range, price came up, came down, respected the bottom of the range, came through the top, peaked through there. Now you'd either want to see continuation, or if it came back down, you know that's a deviation, and then you would have sold $58,000 because that weekly candle closed back within the range, and now you're targeting back down to range low. But what about where we are right now? So what you can do is, let's grab this over here. So if you do look at this as a range trader, now I'm not saying that this is going to happen, but you're looking for the line of best fit, right? Let's just grab that. Okay. So these are the ranges that you're looking at. Let's move this up. Okay, perfect. There we go. Okay, can you guys all see that nice and clearly? So you have the big range at the top over here. Now price is kind of falling within a new range. Now what could happen if Bitcoin manages to reclaim above $18,900? That would be incredibly bullish, because as a range trader, what that would mean is you're snapping back over here. It could still be that you're following this fractal into a depression phase. So you have to manage your risk and be careful. Let me just hide this over here because I don't want to confuse you. Let's hide that. Okay, there we go. So, okay, we're looking at this over here. If you see this snap back into here, you'll be looking to buy the next higher low within this section over here. And then you're hoping this follows a range and targets back towards the top of the range high at around $32,000. But if it starts to flip this into a resistance zone like this, then this could become your new range. And you'd be looking to play within this level over here, or you're looking to play within this level over here. So this is kind of the way that I view the market from a range perspective. Now, this is quite scary because you can see the primary range then would be between 18,900, and your next range could come all the way down to $6,400. Of course, you have mid ranges involved as well, which would be areas of support. And I like to just use the fib like that and mark it out. Let's grab a horizontal over here. And then you mark it at the 0.5 fib level. So I just measure it out like that. And then let's see how this lines up. So that would line up with $12,000. Now, what I would like to see ideally is I would like to see price come down into that $12,000 level now. So like this, let's zoom this out. I would like to see price come down, sweep this level, possibly even get below into 10. And then I would like to see it come back up like this, recapture here, and then we start a new cycle, and here's your new range. You break back into this range, and then you can start targeting towards all-time highs. That would be the ideal situation for me, and I would absolutely ape in, at least with that 25 to 30% that I told you in that section over there, which is coming in between $10,000 and $12,000. So I hope that helps. That's one thing that I'm looking at. Let's see here, RSI rejection continuing to the downside. Let's see if this sweeps the lows one more time at about 25 on the weekly RSI. Not much has changed over here. The only concern, again, long-term that I have is that these moving averages and exponential moving averages start to roll over. You already have the 200 EMA that is turning down, but the big ones is going to be the 200 moving average on a weekly chart. As a long-term investor, you typically don't want to be in assets that have turned over with their 200-week moving average. When price comes back up, it's going to use that as a lot of resistance, especially if it starts to angle down hard. Now, the criteria for capitulation, which I mentioned to you, how do you know if this is a real capitulation? And this is why I never got fooled with any of the previous sell-offs that we had in the market. And I knew there was no capitulation there. But now we have the etchings of a capitulation, because when you look at these charts over here, firstly, it says capitulation. But with that being said, you want it to remain there for a number of days at least to really get things turning purple. And unfortunately, this chart that I use doesn't have history further back than February of 2019. But if you zoom in, you kind of want to see it look like this. So do you see all that purple there? You want to see that purple, and then you want it to go bright pink, and you want it to stay there for a couple of days. That would be a sign, the one sign that capitulation is taking place. And if we go here to, where am I? Let me zoom out. Let's just grab that. Okay. If I go in like that now, you can see only just a small bit of pink there. It hasn't gone fully pink yet, and I want it to stay there for a couple of days. Now, that's the one thing that I look at. The other thing that I look at is the volume. And the volume is very low. If you look, I want to see volume spike high. So by the way, the capitulation, what I just showed you on the other chart over there, it's essentially extremely negative funding rates. So one is I want extremely negative funding rates. Number two, I want to see high volume kick back into the market in the same way that you had within 2018 at the bottom. And then you had, of course, the COVID crash at the bottom. Big spikes of volume. At the moment, the volume is still pretty low. And I'm on Bitstamp at the moment, but last night I went through and I looked at all the different exchanges. I looked at the aggregate exchanges, which show all of them. It's all the same. It looks exactly like this. It's showing that there isn't much volume. Okay, that's the other thing. Then the next thing that I want to see is altcoins take out their lows. And altcoins are nowhere near taking out their lows. A lot of them are actually still about 50% above their lows. But I do anticipate that depending on what happens with the CPI read today, that could be some sort of a catalyst that would lead to prices going much lower. And let's see what the Bitcoin dominance is doing. If that's kicking up as well, that will be additional confluence. So still holding within the range low over here. I want to see Bitcoin dominance begin to shoot up. And then that means altcoins will probably be coming down quite a lot. Okay, I think that's enough with the criteria. Moving on, another very important thing to be looking at is the VIX. And I warned you guys yesterday as well. I said, if you think that prices selling off now are bad, wait until you see when the VIX starts to kick up, because that would mean it will bring the stock market down, and consequently crypto will probably get taken down as well, even harder. So keep your eye on the VIX. I do expect a reaction on the VIX today. One way or another, it's either going to continue on down or it's going to spike up hard. I lean towards, based on what the chart's showing me, that it's going to spike up hard, meaning that maybe the inflation results are not going to be as well taken as many of us hope that it will be. So inverted chart officially has a new higher high. So long term, this is still a downtrend. It broke through the range. I told you we're watching to see one side of this range break, and that would be an indication of which way the next move is going to go. I think you guys can all see what is going on over here. This chart, just a 3-day chart with horizontals. Again, looking at the key yearly level. I want to show you in percentage terms how far away we are. It's pretty damn close. You're looking at only another 17% to hit the key yearly level, and about another 30%, and then you hit the ultimate lows around that 11K zone. Another thing that I wanted to warn you guys of is, if you are a leverage trader and you're pretty new to this, you've never been through market capitulations or anything, decrease your leverage by a factor of 3. So whatever you're used to trading with, decrease that 3 times. So if you used to 10x, then go all the way down to, for example, 3x leverage or 3.3, because when the market is this volatile, of course it's gonna amplify what's going on your leverage. And you might think that this is where I'd usually place my stop loss. You enter a leverage position at 10x like you usually would, and when it hits your stop loss, you've literally wiped 40% of your account. So be cognizant of that and be careful when you're calculating your risk. Let's see, anything else on this one? I think that we've hit home on this a lot. I'm not going to go on the super guppy indicator. It's all the same. Short-term 4-hour charts over here. Look, really, things only start to change when you reclaim above 18,600. Anything that pushes up into here is just going to be another lower high, and it is going to be trouble for crypto. So use the opportunity of the bounces to get out of positions that you hated yourself for being in yesterday, and then consider as well going short. Not financial advice. I'm not a financial advisor, but pretty much that's kind of the way that I'm looking at it. Any spike up, and then if it shows any sign of weakness, so Bitcoin comes up over here, uses that area as resistance, and then starts to turn, that would be a very, very strong signal to short, with stops over there looking for the final leg down. But you want to short carefully around here. I definitely don't recommend it to most people. You want to almost, it's like staring at the sun. You don't want to do it for long periods of time. You want to be very, very careful, because we are nearing the end of this sell-off phase now, and then you can expect massive reactions to the upside, as you can see already, the reactions within all the different cryptos over here. Okay, I think, guys, that brings us to the end. The range still remains the same over here. As I mentioned on yesterday's show, it's just that we're obviously below the range, and any spike back up, as mentioned, will be a deviation. So you'd be looking like that and then targeting back into the range. Or we could be establishing a new range, as I've also shown you, between about 19 and then mid-range, I think was coming in, around $15,000. And then you had the bottom of the range all the way at 12,000. So that brings us to the end. I will be loading up my account over here with a trade as soon as the opportunity presents itself. I'm just watching to see when Ethereum does start turning over. I'm primarily looking to short Ethereum because Ethereum hasn't even made a new low yet, and I do anticipate Ethereum is going to go down to that region of $750-ish. So this is the higher risk to reward trade for me. Ethereum should still react at some point. So if you do want to check out Prime XBT, there is a link below. If you use my promo code Kyledoops, you'll get up to $7,000 in sign-up bonuses. And then again, make sure for those of you who don't know yet, use the Biswap link below. This is where you can do your DEX trading, because everybody is freaking out now and taking their coins off of exchanges, and that can create a bit of a run on the exchanges, run on the banks kind of vibe. And Biswap is where you can still make your trades to get spot positions underway. So check that out in the description below. And I think that brings us to the end. Let's see how today goes. Definitely all dependent on the CPI data. And thank you all for watching. I appreciate each and every one of you. If you would do me a massive, massive favor, and if you enjoyed the content, just give this video a like below. Also, let me know in the comments what your thoughts are. Where do you think the bottom is? And when do you think the bottom will be? And that's it from me, guys. I'll see you on the next video. Cheers for now.